Hello, this is Business Now, reaching you live from iBrandTV news studios in Lagos, Nigeria. Coming up, the National Insurance Commission conclude plans to introduce the risk-based capital roadmap to guide the industry on a new capital regime. National Pension Commission and Pension Operators Association of Nigeria to provide free health insurance for contributors of the micro-pension scheme. International Monetary Fund weighs impact of Russia's sanctions on global economy. Ukraine's economic output will likely contract by a staggering 45.1% this year as Russia's invasion shuttered businesses, slashed exports, and rendered economic activity impossible. Hello again, and thanks very much for joining us. I am Michael Nath. Ukraine's economic output will likely contract by a staggering 45.1% this year as Russia's invasion has shattered businesses, slashed exports, and rendered economic activities impossible in large swathes of the country, the World Bank said on Sunday. The World Bank also forecasts Russia's 2022 GDP output to fall 11.2% due to punishing financial sanctions imposed by the United States and its Western allies on Russia's banks, state-owned enterprises, and other institutions. The World Bank's War in the Region economic update said the Eastern Europe region, comprising Ukraine, Belarus, and Moldova, are forecast to show a GDP contraction of 30.7% this year due to the shocks from the war and disruption of trade. Growth in 2022 in the Central Europe region, comprising Bulgaria, Croatia, Hungary, Poland, and Romania, will be cut to 3.5% from 4.7% previously due to the influx of refugees, higher commodity prices, and deteriorating confidence hurting demand. For Ukraine, the World Bank report estimates that over half the country's businesses are closed, while others are operating at well under normal capacity. An aggressive Federal Reserve, soaring inflation, and geopolitical uncertainty from the war in Ukraine are muddying the outlook for the upcoming U.S. earnings season, leaving some strategists wary of surprises as corporate results kick off this week. Expectations for earnings growth have largely held up in recent weeks, despite a first quarter that saw commodities prices surge after Russia invaded Ukraine, threatening to exacerbate already high consumer prices. Analysts expect S&P 500 earnings to have increased by about 6% in the first 3 months of 2022 from a year ago, and forecast profit growth of about 9% for the year, forecasts in line with those at the start of the month, according to IBE's data from Refinitiv. The reporting period for S&P 500 companies begins this week with results from major banks, including JP Morgan Chase on Wednesday. Some worry, however, that a cocktail of rising prices, higher wages, and tightening financial conditions may have weighed on some companies' balance sheets or clouded expectations for the rest of the year. Now, the International Monetary Fund has said sanctions on Russia will have a substantial impact on the global economy and financial markets, with significant spillovers to other countries. In IMF Article 4, a consultation on Ukraine released at the weekend, IMF Managing Director Kristalina Georgieva said in many countries the crisis is creating an adverse shock to economic activities amid elevated price pressures. The sanctions announced against the Central Bank of the Russian Federation will severely restrict its access to international reserves to support its currency and financial system. International sanctions on Russia's banking system and the exclusion of a number of banks from SWIFT have disrupted Russia's ability to receive payments for exports, a payment for imports, and engage in cross-border financial transactions. Georgieva said while the situation remains highly fluid and the outlook is subject to extraordinary uncertainty, the economic consequences were very serious, adding that energy and commodity price, including wheat and other grains, have surged. Now, out of over 12,000 abandoned projects worth more than $102 billion scattered across the country, the Infrastructure Corporation of Nigeria, a dedicated special purpose vehicle promoted by the Central Bank of Nigeria, Africa Finance Corporation, AFC, and the Nigerian Sovereign Investment Authority, says it would cherry-pick commercially viable ones among the lots for execution. Governor of the Central Bank of Nigeria, Godwin Emefiele, who dropped the hint of the weekend in Lagos during the infracorp term sheet signing with independent asset managers, said in collaboration with the asset managers, infracorp would pick up public and private infrastructure considered commercially viable for execution with its 15 trillion naira capitalization. Emefiele, who doubles as infracorp chairman, said that among projects selected are the Lagos-Ibadan Expressway, Abuja-Kaduna and Kano, as well as Second Niger Bridge. He says the Second Niger Bridge has got to completion a point, but there are still some ancillary funds to complete it. There are other infrastructure such as roads or other kinds of infrastructure projects that are, as long as they are commercially viable, we'll be looking at them. That's end of quote. Now, the National Insurance Commission, NICOM, has concluded plans to introduce the risk-based capital roadmap to guide the industry on a new capital regime before the end of April 2022. The Commissioner for Insurance, Sunday Thomas, while addressing managing directors of insurance companies and the Nigerian Insurers Association, informed them that the Commission would by month-end make public its decision on what should constitute the capital for operators in the sector. Thomas noted that there has been tremendous progress in the uploading of data by operators, stressing that by the end of April, the Commission would make its position known to those who have not fully complied. He urged underwriting firms to take the issue of claim settlement as a priority, as it is only meant to create awareness about the industry. Meanwhile, the National Pension Commission and the Pension Operators Association of Nigeria are planning to provide free health insurance for contributors of the micro-pension scheme. They concluded on the plan after a meeting on ways to woo artisans into the contributory pension scheme. Confirming this development, the Managing Director, Access Pension Fund Custodian Limited, Idu Okwosa Okahielam, said the move was meant to drive inclusion in the scheme. The pension operators had meeting and had resolved to enroll contributors of the micro-pension scheme with the health maintenance organizations. Only 73,600 informal sector workers have registered under the contributory pension scheme as of the end of December 2021, according to figures obtained from PENCOM. The federal government has commenced the empowerment of identified local producers of assistive technologies in 36 states of the Federation and the Federal Capital Territory. Minister of Humanitarian Affairs, Disaster Management and Social Development, Sadiya Umar Farouk, at a workshop in Lagos, Lokoja, said the program is designed to ensure that millions of persons with disabilities enjoy the right to independent living, inclusion and participation through local production of quality and affordable assistive devices. The minister was represented by the Director of Special Needs, Nkechi Onwukwe. She said the Department of Special Needs was working in collaboration with partners to nurture and harness the potentials of PWDs, as well as promoting activities that enhance their interaction, mainstreaming, and empowerment for a more sustainable economic, social, and political growth of the nation. She said after the training, the ministry will give a grant of 200,000 naira to local producers to expand and improve on the production of wheelchairs, prostheses, crutches, and other devices. Now, no fewer than 2,256 depositors have lodged complaints on transactions totaling 368.9 billion naira and $428.7 million on their accounts against their banks with the Chartered Institute of Bankers of Nigeria. The institute, through its Ethic and Governance Directorate, however, said it had been able to resolve 2,206 of the reported cases. It also said that total amount awarded on the cases were 30.65 billion naira and $19.48 million since the inception of the tribunal. The institute disclosed this in its 2021 annual report, which was released on Saturday after its annual general meeting in Lagos. The president of CIBN, Bayo Olugbemi, chaired the meeting with a huge physical and virtual attendance by members of the institute across the globe. In 2021, the CIBN said it received 35 petitions with claims amounting to 4.3 billion naira, while 17 cases were fully resolved. Now, Quick Teller Business, powered by InterSwitch, has introduced a smart point of sales POS terminals, which will enable small and medium business enterprises and merchants in Africa to accept payments seamlessly and better manage their transactions. Olawale Akombi, the group head, Quick Teller and Marketing InterSwitch Group, described the smart POS as a business infrastructure that serves as a backbone for enterprises, equipping them with tools for market expansion. He said with the cutting-edge features on the smart device, businesses can accept major international cards, access business reporting tools online and in-store storefronts, manage transaction disputes on their devices, and enjoy uninterrupted network availability. Furthermore, the combined use of the intelligent payment tool and the Quick Teller business platform save time for business owners and allows them to focus on growing revenue while delivering exceptional service to their customers. Now, telecommunication giant MTN Nigeria has received the final approval to operate as Momo Payment Service Bank Limited. The approval was granted by the Central Bank of Nigeria, according to a statement issued on Monday by MTN Secretary Uro Okpana. Okpana says the date of commencement will be communicated to the CBN in accordance with its requirements. Payment service bank operators provide financial services through digital means to low-income earners and people that do not use banks or banking institutions for transactions. They are expected to operate in rural regions and areas where Nigerians do not have bank accounts and should have at least 50% physical access points in rural areas. Following the CBN nod, MTN Nigeria will join the likes of Money Master PSB, a subsidiary of Glo, and 9PSB, a subsidiary of 9 Mobile, to operate in the fintech space. Now, still to come, Russia ruble loses bullish pace as RCB shifts focus to boost economic growth. Details of this and more after this commercial break. Stay with us.
Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products. from spar to spar. Looking for that ideal solution. I found the solution. And it's Blemiville Skincare and Spa. My name is Neil, and I'm proud to be a part of the Blemiville family.
You're watching Business Now on our iBrandTV Lagos. Now to Africa's scene. Equities investors yet to claim their dividends may face a more rigorous and cumbersome process in recovering them, as the Securities and Exchange Commission has disclosed that the 170 billion naira unclaimed dividends have been remitted to the new Unclaimed Dividend Trust Fund, UDTF. The fund is being managed by the Commission on the Debt Management Office, DMO. At a virtual post-capital markets committee, a CMC meeting held in Lagos at the weekend, the Director General of the SEC, Lamido Yuguda, said unclaimed dividends have been moved into the fund and are now managed by both institutions. He, however, stated that the monies would be released to the owner or beneficiaries with appropriate documents proving ownership. Yuguda also noted that the information that has to do with unclaimed dividends can now be generated from both the SEC and the DMO. They also argued that the value of the unclaimed dividend, estimated at 117 billion naira, had reduced significantly with the application of the Companies and Allied Matter Act, law on unclaimed dividends. Yuguda also said that the Commission is currently working with other agencies on a sectoral basis to tackle any potential cybersecurity threat in the capital market. Now, Tech4 Development, a non-profit organization dedicated to creating access to decent work, entrepreneurship opportunities, and platforms for Africans, has announced plans to empower 5 million African girls and women by 2030. The organization is therefore calling for applications for its Women Techstars 2023 Fellowship Program. According to the organization, the Women Techstars Fellowship, launched in 2021, is a year-long immersive training and experiential learning program for young girls and women across Africa to acquire deep technology skills in 6 months of intensive training, 6-month internship, and mentorship. The program, designed using globally recognized standardized learning curricula across the 8 learning tracks, will ensure the best learning experience to deliver the right outcomes. Tech4 Dev disclosed that in its first year, the Women Techstars Fellowship received over 4,800 applications from 19 countries, accepted 338 beneficiaries into the program, which is a 7% acceptance rate from 5 countries, which include Nigeria, Ghana, Kenya, Egypt, and South Africa. It added that Women Techstars Fellowship would seek to do even more this year. Now, Kenya Airways defaulting on interest for a 25 billion shillings loan owed to the government in the year ended December, highlighting the financial hit the airline took from the pandemic disruptions. The national carrier revealed in its report for the year ended December that it did not make any payment for the loans that were taken into 2 tranches last year and in 2020. Kenya Airways applied for the loans after grounding its fleet following the ban on international flights as Kenya and other nations raced to curb the spread of COVID-19. The Treasury gave Kenya Airways 11 billion shillings bailout in 2020, Months after the suspension of international and domestic flights, the carrier received the second batch of 14 billion shillings last year. The loans attract an annual interest at the rate of 3%, which should be paid by the 20th of June over 5 years. But the national carrier says it sought a waiver and deferral on the unpaid interest. The government, through the Treasury, holds a 48.9% stake in the airline and has provided KQ tens of billions of shillings worth of shareholder loans in recent years. Staff numbers dropped to 3,544 in the year ended December from 3,652 in 2020, while employee costs fell to 12.71 billion shillings from 13.619 billion shillings in a similar period. Foreign scene now. After a jaw-dropping rise in the Russian rubles, the Russian central bank slammed the brakes last week with an unannounced interest rate cut, leading the ruble to fall. In a press release, Russia's central bank announced lowering the key rate from 20% to 17%. The Bank of Russia said the ruble's recovery from severe losses in the days following the February 24 invasion had decreased the risk of sharply higher inflation. The ruble weakened 2% against the dollar after the Russian apex bank cut its key policy rate. On Friday, it traded at 80 rubles to $1, still around the level it was before the Ukraine invasion. At the time of writing this report, the ruble continues to trend bearish, trading at 81.22 rubles to $1, indicative of a 2.27% loss within 24 hours. Meanwhile, Swedish telecom equipment maker Ericsson said on Monday it was suspending its business in Russia indefinitely. The company says in the light of recent events and European Union sanctions, the company will now suspend its affected business with customers in Russia indefinitely. End of quote. Ericsson said it would record a 900 million crown provision in the first quarter for apartment or impairment of assets and other exceptional costs related to the move. In February, Ericsson paused deliveries to customers in Russia. Stocks and U.S. equity futures fell along with treasuries Monday amid heightened worries about inflation risks and tightening in financial conditions. A gauge of the dollar climbed. An Asia-Pacific equity index shed more than 1%, dropping to the lowest since mid-March. China and Hong Kong struggled with tech shares, skidding on new guidelines from Beijing aimed at curbing data monopolies at internet platforms. U.S. and European futures also declined, pointing to more challenges for global shares after the Federal Reserve last week signaled sharp interest rate hikes and balance sheet reduction to curb price pressures. Real U.S. yields are getting closer to turning positive, a development that could be an impediment for risk assets. Oil prices slipped 2% or $2 a barrel in early Asian trading on Monday, following a second straight weekly decline after world consumers announced plans to release a record volume of crude and oil products from strategic stocks and as China lockdowns continued. Brent crude fell $2.04 or 2% to $100.74 a barrel in early trade, while U.S. West Texas Intermediate crude lost $1.94 or 2% to $96.32. Last week, Brent dropped 1.5%, while U.S. oil slid 1%. For several weeks, the benchmarks have been at their most volatile since June 2020. Member nations of the International Energy Agency will release 60 million barrels over the next 6 months, with the United States matching that amount as part of its 180 million barrel release announced in March. The moves are aimed at offsetting a shortfall in Russian crude after Moscow was hit with heavy sanctions following its invasion of Ukraine. We'll go on a commercial break now. When we return, Perpetua will bring you more news. Stay with us.
Swift Dry Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services that meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Yeah, for clean wash and quick delivery. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. For clean wash and quick delivery.
Swift Dry Cleaners. Clean wash, quick delivery.